Hi, in today's video, I'm going to be talking about 7 biggest mistakes I made when I started my investment journeys 3 years ago. And these mistakes are most common mistakes that beginner investors make when they are starting their investment journey. So I'm making this video so you don't make those mistakes or you learn from our mistakes and then you can make better investing decision when you begin your investing journey. So welcome to my channel and I hope you find this video valuable, so you can like and subscribe if you're looking to go into investing or you're looking into personal finance and how to manage your money. I created this channel purposely for that. So thank you for coming and let's jump into it.
Welcome to our channel, where we explore the intersection of finance and film.
The first point I'm going to be talking about is avoiding speculations or hype. So the most important thing about to know about investing is that investment is to help you minimize risks and maximize returns on your money when you put your money into, if it is the stock market or if it is into a money market fund or mutual funds or whatever. The main purpose of investing is not to lose your money. So if you go and follow trends or hypes about or the trending company and the trending crypto and all these things, you can easily lose your money. So for me, when I started, I was looking into ways to make money with small money. Yeah, those things are one in a million. It's like playing the lotto. Your chances are very, very, very small. So I like now I try to always safeguard my money and not lose the little money I've been able to make, and then I want to put it into investment. So I would advise you stay away from hype and what's it called speculations. Read about the companies, research about the companies, know the companies that you want to put your money into. Don't follow the price, uh, follow the value of the company. If the price of the company is low and you do your due diligence and you know that okay, the potential of this company being profitable from 6 months, a year, or years down the line is high, then it's a good buy. So the book I recommend you buy, you can have an easy PDF download on the web. It's called Intelligent Investor, and that book helps you understand the emotions behind investing and why you should not make certain decisions when you are investing. The second mistake that I made when I started my investing journey is investing in things I don't understand. Do not invest in things you don't understand. So if let's say that there's a company that you don't know what they do not invest in them. You need to do your research and know exactly what you are putting your money into. For instance, if you ask me, now I think I understand how crypto works, but previously I do not understand how crypto works. I'm not going to put my money into crypto, but I did those days. Even now that I do understand what crypto means and what um, the difference between cryptocurrency and fiat money and all that. I still do not put my money into cryptocurrency. I don't have a crypto portfolio. Um, Other people do that, but I don't, because I try to safeguard my money. So I don't invest in things I do not understand. So it is very important that you don't make this mistake when you're a beginner investor. Do not go and put your money into things that you do not understand. Do not go and put your money into um, investments that you cannot explain in 4 sentences what they do. You need to know exactly what the company does, what sector or industry are they in. How do they make money? Who are their customer? If you cannot answer all these questions, then what's the point? Those are the biggest mistake that I made when I started investing, and then I advise that you don't make the same mistakes. Another key mistake I would like you to avoid when you're about to start investing is high broker fees. Now, as a beginner investor, your money is your power. That is what you're going to use to look for other how do you call it? Invest into companies and get other great returns on your investment. So your money is your power. So as a beginner investor, you do not relinquish fractions of your money in high volumes just because they are fees. So there are high broker fees that you need to stay away from. there are some brokers that uh, like have high broker fees and high charges when you're using their platform for transactions. Stay away from brokers that have high broker fees. Anything between 0 to 1.8% is okay, but anything above that, you know that it's not, it's too high, and if you're investing, let's say $100, 1,000 cedis, 500 cedis, then they take, let's say, 2% of that. That's a lot. That alone is like already a chunk of your money gone. So look, pay critical attention to high broker fees. Make sure you are not paying high broker fees when you are about to start investing. So you need to know, do your research and choose the best um, brokers that are on the market, and I think you would be good. Do not invest money that you cannot afford to lose. Okay, I made that same mistake when I started out investing. I would just use chunk of money to invest without even looking whether I paid my rent or have food, or all in the name of investing. So do not invest money you cannot afford to lose. So the method that works for high investors or professional investors is they use the method of having a financial buffer, having a financial security, buffer. So, for instance, you need to have an emergency fund account in place, which ranges from you need to save up to your expenses of up to um, 0 to 6 months of expenses into your emergency fund account, and then you need to make sure your bills are paid. You need to make sure all the other things that would make you live a comfortable life in your current situation. You need to check all those boxes before you carry lump sum and go and invest into the stock market or invest into any other thing that you are investing into. Now, the other thing I would like to say is that do not borrow money to invest. Oftentimes, the market is very volatile, and you cannot determine how high or how low your investments are going to perform. So you need to always try to mitigate your risks by not investing money that you cannot afford to lose. I made that mistake typically when I bought my first investment. This one is not even in the stock market. I bought my first land that I bought. I used all the money I had at the time to buy the land, and there's so many issues with that investment, and I learned not to do that particular mistake again. So make sure that you have a strong financial buffer before you go into whatever investment that you're about to go into. Another mistake I want us to cover in this video as well is waiting to invest. Do not wait to invest. If you have all your basic financial needs covered, start small. You start small and you stay consistent, and you're going to grow it over time. Stop waiting for the right time before you invest. Okay, you cannot time the market. Now, the more you wait for the right time before you can invest, the more your money is losing value, the more inflation is eating up your money, the more you're putting money into things that you wouldn't have done if you had your money in some type of investment. There's this popular investment saying that goes that time in the market beats timing the market, because you cannot beat the market by timing it, but time in the market, if you consistently invest some amount of money over a period of time, you're definitely going to beat someone who is sitting down timing the market. And I recommend, and all other investors that I follow and I listen to advise dollar cost averaging. Now, dollar cost averaging is when you put a particular amount of money into your investment every month, every week, anyhow you structure it. You can do it every 6 months. You can do it every month. I do every month. You can do it like that over a period of time. Time is the most valuable asset that you have as an investor. So let that be your guide when you're investing. So stop timing the market. Stop waiting for the right time to invest. Stop waiting for you to have like a lot of money before you invest, and start the process gradually, and then you're going to elevate your portfolio. Even the financial experts, unless you hire them, and unless you're a rich man and you hire them to pick stocks on your behalf, they do not recommend giving you financial advice or which stocks to pick or which stock not to pick, because investments into, for instance, the stock market and whatever investment is derived from personal philosophies, emotion, and strategical um, strategical patterns of an individual investor. You cannot use somebody's strategies for your investments, for your investment, for your investing journey, because they are different. You guys have different goals, so do not really listen to investors experts and people who call themselves experts. There are a lot of them on social media these days. Oh, buy this particular stock, buy that particular stock, buy this particular stock. By all means, you can still hear them, and then now do your due diligence and see if those recommended stocks or shares that they are recommending to you fit into your particular investing strategy. So if you look at your investment plan and theirs don't fit into it, then you just stay away from it. So for me, that was the biggest mistake. One of the biggest mistake I did when I started investing. I was following the hypes of, oh, buy this stock, buy this stock, buy this stock. And then over time, when I came to understand how investments work and how I need to have a good plan for myself. Now I don't follow that. My investment strategy now is totally different. I consider myself a passive investor now because I invest into ETFs. I invest into like all these mutual funds, all these how do you call it, index funds and things like that, money market fund and things like that. My best performing portfolio is VOO, the Vanguard S&P 500, SCHD. Those are ETFs that have a bucket. Those are ETFs that you can consider a bucket of stocks. So there are various stocks up to 500 in, for instance, the Vanguard S&P 500. So it's safe for me because if I am to use, let's say, 1,000 CDs to buy each of the individual stocks that is in there, it's a lot of money. I don't have that now. So my investment strategy now um, is to buy what's it called, ETFs that have how do you call it, strong track record, and is an industry standard. Currently, the industry standard for um, long-term investing when it comes to ETF is the VOO, the Vanguard S&P 500, and I think Schwab is also there as well. But I prefer VOO because most of the big like the Warren Buffett and Charlie Munger, all these people, their investment portfolios are used to track the S&P 500 side by side when to determine whether the market is performing well or not performing well. That's it for this video. If you found this video valuable, please like and subscribe, and so we can it will encourage us to provide you content like this. If you have any investing question on mistakes that you think I didn't talk about in this video, you can mention it, and you can leave a comment in the comment section below, and then we'll have a discussion on it. Maybe you might teach me something I don't know. Like I said, I'm on this personal finance journey myself. Call myself a personal finance enthusiast, and I hope that we will get to learn from each other and grow from each other. So thank you for watching, and I'll see you in the next one.